Hello, everyone. Yeah, this is Cheryl again. So it's obviously time for an assessment. This is why I'm making some masterclass recordings for you. So the exam is just around the corner, and I hope people have started with their preparation already. So the purpose of these recordings I'm going to make for you is just to consolidate the main areas and make sure that you have covered what you need to. I'm sure your lecturers on campus have done a fabulous job. So obviously, in this amount of time, it's not possible for me to cover every single part of every learning unit. So please bear that in mind. You will have to study all of the sections in each of the learning units. And remember that the exam is covering all of the units from learning unit 1 to learning unit 8. Yeah. So please don't leave anything out. I'm just going to pick 2 topics from learning units 5, 6, 7, and 8. And I'm going to refer you back to the master classes that are made for test 1 and test 2, because there are enough exercises to cover learning unit 1, 2, 3, and 4. So in the exam session of the master classes, I'm focusing on learning unit 5 onwards. Right, so without further ado, let's get stuck into learning unit 5, which is on relevant costs. Finding the correct question. Yep, there we go. Sorry, I hit the wrong button by mistake. Dreadful start. So you need to understand what relevant costs are. They are future differential cash outflows. And you must be able to give examples of relevant costs and find them in a question, as well as know which ones are irrelevant so that you would know not to include them. So relevant costs consist of variable costs, which are avoidable. They must obviously be cash costs as well, and differential costs, as well as opportunity cost. Those are the categories of relevant cost. So which ones then do we not consider when we come to make a financial decision? It's the ones that are irrelevant. And what are they? Costs that are of a non-cash nature, as well as sunk costs, and any cost that is unavoidable. And they tend to be your fixed overhead costs. Then you also need to understand when we can apply the concept of relevant costing. There are several scenarios that are given there in the book. I'm going to be dealing with 2 of them. One where you have limiting factors that exist, and I'm also going to look at the decision whether to make or buy. So the first question that you see on the screen comes from learning unit 5, and it's on contribution margin per limiting factor. So let's see what questions I'm going to be dealing with. First of all, I want to show you how you would work out if an input is a limiting factor or if it isn't, because that will guide you as to which method you're going to use to solve the problem. So just a recap, if you have 2 or more limiting factors, the method you use will be linear programming, as in learning unit 4. If, however, you only determine 1 limiting factor, then you will do the contribution margin per limiting factor, as I'm about to show you now. Okay. Because that would be a relevant cost. Then, once we've done that, I've just put some questions in part 2, just to recap on the meaning of contribution, as well as something which people tend to overlook, the contribution to sales ratio. And then lastly, the reason for doing the question, we must find the optimal product mix. So how many units of the various products to make in order to maximize the contribution. Right, so let's look at the question first of all and highlight the main things. So it's a business that makes soaps, etc., for the hotel industry. They have 3 different types of soap. Here they are. We can just highlight their names: Sea Fresh, Lemon Breeze, and Rosebud. Hopefully a suitable scent for everybody. Okay. Here is the information. The sales demand in terms of physical units, the price per unit, as well as your variable cost, and some information relating to the number of labor hours. The most important thing at the bottom here is this. It says we have 16,000 direct labor hours available, maximum, and no problem with the other factors. It says other resources readily available. So if there's machine hours or if there's materials, etc., those are not limiting. You might not have that piece of information. It might actually say that there is a certain amount of materials available. So it would be up to you before you start the question to determine with all of the inputs whether they are limited or not. So here, to save time, we're just going to deal with one. So the first part says, is direct labor limiting or not? So we need to understand what that means. If there is not enough labor hours available to produce all of the units as indicated in the sales demand. So what we need to do is find out the total number of labor hours that would be required in order to make the maximum units of each of the 3 soaps, compare that to the number of hours that are available. If we need more than there is available, we will say it's a limiting factor. If we have sufficient, then no. So there's various ways in which you can set it out in a table or just simply like I have here. Tables generally are better, but I thought this time I will just do it in another way, just to indicate that there's more than one way to set things out or more than one method. But there are certain key things in there that you must work out. So what we're going to do is we're going to work out the total number of labor hours needed for each of the products. So if we look here, first of all, at Sea Fresh, it requires 0.2 of an hour to make a single soap. So if we multiply that by the demand of 25,000, that will give us the total number of hours required to satisfy the production of Sea Fresh. Then if we do the same for the next one, half an hour for one, which we must multiply by the demand of 15,000, that will give us hours required for Lemon Breeze. Then for the last one, 0.4 hours per unit times 10,000 hours. If we do the multiplication and we add it together, that will give us the total number of labor hours required. So have a look over here. I've just done it like that. Okay. So total hours needed over there comes to 16,500 hours, which we now need to compare with the available hours that were given. And you see that that is only 16,000. So we notice that we are short by 500. So you must obviously work out that difference. It's not a lot less, but nevertheless, it is insufficient. So you must work out the difference and then answer the question. So this here would be a good way of being able to write it up. The hours needed exceeds the budget by, and then you put the difference there, and then you will wrap up and say, direct labor will be a limiting factor. So I always recommend that you begin a question of this nature like that. work out the hours required, find the difference between that and availability, and then specify if it is limiting or not. So we've done part 1. Now, part 2, there are 2 things happening in there. So we're going to work out the contribution per unit. That's one thing. And then we're also going to have a look at the contribution to sales ratio, product by product. So the contribution per unit, we started looking at that already in Learning Unit 3, where we did break even. Yeah. We did it again in Learning Unit 4 with the linear programming. So very simple. It's your selling price per unit, subtract your variable cost per unit. And here it's nice and convenient. You can't possibly go wrong because I've got a heading over here. I say variable cost rand per unit. If it's not given like this, please just be careful. We must look at the cost of each of the variable inputs. Make sure that you can identify whether we are looking at a cost value or if we are looking at a quantity value. You could make a silly mistake there carelessly. Yeah. And if it didn't have that heading, please remember that your direct materials and your direct labor are always variable. And then when it comes to overheads, some are variable, some are fixed. Now don't, if you haven't got the heading, don't only look here and see variable only comes next to the word the overheads and only include that. Always direct material and direct labor must be included together with any variable overheads if there are. Should you come across any fixed overheads, you would know to leave those out. So I will just pick one of them here for you, and then you would just do the same for all of the others. So let's deal, first of all, let's pick Sea Fresh. Sea Fresh has a selling price of 15 Rand. Then if we take the variable costs, all 3 of them, and add them together, that will give us 250 plus 3 is 550 plus 1 is 650. That if we subtract from 15 Rand will give us the contribution margin per unit. All right, so have a look there. Here's selling price. These show your workings there because you remember you get method marks for workings. Show that you've added the 3 items together. Subtract the total of 650 gives us a contribution per unit of 8.50 Rand. Then you would do the same for the others. Very easy, just the selling price, subtract the variable cost per unit. Now, what about the contribution to sales of each product? So this one is now known as the contribution margin ratio, or if you remember the terminology from break even, the marginal income ratio. So it's simply your contribution or marginal income. Remember, those words are interchangeable as a percentage of the selling price. So let me pick a different one for you. Let's have a look at Lemon Breeze. Lemon Breeze has a selling price of 25 Rand. So we would have to work out the contribution. So we will subtract 650 plus 6 is 1250 plus 2 is 1450. Subtract that from the selling price of 25 Rand. And that here gives me a contribution per unit of 10.50 Rand. Now what I must do to work out the contribution to sales ratio is I need to put that 10.50 Rand as a percentage of 25 Rand, and that will give me 42%. And then you would do the same for C fresh as well as rosebud. Now we're on to the interesting part, and that is calculating the optimal product mix. So how many units of the 3 soaps must the business make in order to maximize the contribution or the profit? So remember, those words are meaning the same thing. The difference between contribution and profit is taking off the fixed cost. And because the fixed costs are the same, it's not going to change the answer and the decision. And fixed cost, as we said at the start, are irrelevant cost. So that's why we might as well simplify and just do the calculation on the basis of contribution. So what we need to now do is realize that the labor hours are not enough to produce the demand of all 3 of the products. So now we need to do a relevant costing exercise. So the relevant factor here is the shortage of the labor. So we now need to relate the contribution to how much of time each product is going to use up. And that could change the profitability of each of the products. So if you have a look here, purely on the basis of contribution, in other words, if we look here, we will see Lemon Breeze has the highest, followed by Rosebud, and lastly, Sea Fresh. But what we've not done here is taken into account how much of the labor time is used, and that could change the picture. So what we now need to do is work out the contribution per direct labor hour. So this is the exceedingly important part here. There. This is what we need to be doing here. So we need to relate the contribution to the amount of time used. So let's see what we're going to do. We're going to copy down here the contributions. So what we worked out above, we're just going to put down here. Then this next line is the important piece of information. We must now find how much time labor works on each of them. So this is now why we need to use here the direct labor hours per unit. So we're going to take the 0.2, 0.5, and 0.4. Just remember those numbers. And we're going to put it here. Doesn't like that. We're just going to put that here. Then what does contribution per limiting factor mean? You take the contribution and we divide it by, that's what per means, divided by time. So what we then are going to do over here is we're going to say 8.50 Rand divided by 0.2. Perhaps I should just type that there, so you make sure you don't miss that. Let's just put it in here. How did I get that? It was the contribution of the 8.50, but I must go and divide it by 0.2. And that gives 42.50 Rand. What are we going to do over here to get the 21? We're going to take the contribution of 10.50 Rand, but we must divide it by half a labor hour. That gives us 21 Rand. And over here, the contribution is 10, but we must relate it to the consumption of the limiting factor. And if we do that, we will get 25. So once we've done that, we can then determine the profitability relative to the limiting factor. And we can set up a ranking order. So we're now going to look at 42, 50, 21, and 25. and put them in order of most profitable to least profitable. So Sea Fresh comes in position 1, followed by Rosebud, and lastly, Lemon Breeze. So do you see how the situation has changed? So if we only considered the contribution, Lemon Breeze would have come up tops because that was 10 Rand 50. But on the basis of the fact that it uses the most amounts of labor time, which is the limiting factor, it now lands up in last position. So once we've now done that, we're going to set up this over here, which is a production schedule. And in here, we are going to determine the profit maximizing combination of the three products. So this would be a good way to set it out. Column headings from left to right, product, labor hours used, labor hours available, and units. And we're going to start with the product that comes in position 1, which is Sea Fresh. So we're going to start here. And how many units are we going to put in? We need to go back up to the question to look at the demand. So Sea Fresh here, 25,000 units. So we're going to put that number there. How much time is there? 16,000 was the maximum number of hours. If we now produce all of the units of Sea Fresh, we've already done the workings up here, so don't need to redo it again. We see it would use 5,000 hours. So then we will say here, hours used is 5,000. Then how many hours become available? We need to now come down here and subtract the 5,000 hours from the 16,000, and that will tell us that we now have 11,000 hours left. Now we move on to the production of Rosebud, because that came in second place. And we see from here, Rosebud, 10,000 units. Let's quickly check and see how much time the Rosebud would use. It's 4,000 hours. So we do have enough time to make all of it. So that's why we're going to put the full 10,000 units. It would consume a further 4,000 hours. And now, how much time have we got left? We're going to subtract the 4,000 from the 11, and that means 7,000 hours are left. Now, because we didn't have enough labor hours, it tells us we're not going to be able to produce all of the required units of the Lemon Breeze. So this now requires a calculation over here. If we know how many hours are left, which is 7,000, and we know it takes half an hour to produce one, we will now have to do this little calculation over here to find how many Lemon Breeze can actually be made. So the time of 7,000 hours divided by half an hour each means we can produce 14,000. Then all of the time is used up, and then labor hours available after all of that would be 0. So we came quite close to being able to meet the entire sales demand because we were only short about 500 hours. So it might not be so simple in another scenario, but what would you do then? Just keep looking to see how many hours you've got left. Have a look in your workings in the first part. That will tell you how many hours you need. So you might find that you could run out of time in the production of the second product, or in this case, it was the final one because there was only 500 hours too little. But let's say that we required 20,500 hours. The situation there for the optimal product mix could actually be quite different. You might not have enough time to make all of the second most profitable one. And then here, very important, you don't want to lose marks for nothing. The question asked you how many units of each they should make. So make sure that you have actually written that. Don't just leave it there in your production schedule. Do a little sentence clearly stating how much can be made. So you would say the sales demand for sea fresh, and in fact there you could actually put in the 25,000, and the sales demand for rosebud of the 10,000 that can be met, but only 14,000 lemon breeze, not the last 1,000, due to the fact that we had limited labor hours available. So there are questions like this that you can practice. In particular, there's question 5.1 in the textbook, and I'm sure that your lecturer has given you some other questions, and I have shared some past papers with your lecturers in case they weren't available. And I'm sure that there's plenty of questions like this that you could work through to make sure that you grasp this section. All right, so I'm going to now wrap up this recording and do something else from Learning Unit 5. Hope everybody has enjoyed this one and understands the section nice and clearly. So for the moment from me, it's goodbye.